$84 trillion will be transferred in the next 20 years from the baby boomers to the millennials and the Gen Zs in the next 20 years. And only those that are prepared are going to actually see that come to fruition. A majority of that wealth is slated to be destroyed. And if you're not prepared, you're also going to be one of those people that are going to be a statistic of having wealth destroyed. Because only 22% of the wealth being transferred actually have meaningful discussions, plans, discipline, and rules on how that money should be transferred, how it should be handled, and how it should be invested moving on through time to show continuity throughout the generations. Only 30% of investors' needs are actually being addressed and met by the traditional financial advisors and the financial industry today. What does all this mean? It means you are not being served. It means the system is rigged against you. So, welcome to protecting your assets through chaos, conflict, and crisis. Last week, we talked about how the Fed was fibbing to you. This week, we're going to talk about how the crisis of commercial real estate is actually unfolding right in front of you, and the Fed is continuing to fib and not tell you the truth. Welcome, everyone. I'm Rob Napolitano. Welcome again to protecting your assets through chaos, conflict, and crisis. If you stay with me for the next 7 to 12 minutes, I'm going to take you through some of the data that's being brought out to you in mainstream media and some not even in the mainstream media. But I want to bring to you in these weekly briefings independent, verified facts so that you can have good education, so that you can make informed decisions. So for those of you that are returning, thank you for returning. For those of you that are new, here this week, please to give me a chance to tell you a little bit about myself in a couple of seconds here. So I got a look inside of the real banking system and how that really works back in 2008, when at that point I was doing $40 million a month in mortgages myself in my own mortgage company. And thinking I knew it all, I actually didn't. The great financial crisis came, wiped me out. I went into a Chapter 13 bankruptcy, fought my way through, and I actually had 2 lawsuits against 2 of the biggest too big to fail banks and came out on top, where they paid up my entire bankruptcy estate, all my attorneys, and I had extra surplus to walk away with. I'm one of those very few people that you'll ever meet that went into a bankruptcy at a certain net worth and actually came out at a higher net worth. And when I went through that experience, I felt at that point that I had a professional and personal responsibility to bring to other people what I had learned, my insights, my experience. And I wanted to educate other investors by sharing that insight and cutting through the noise and bring you facts backed by data and to empower you to make more intelligent and more informed decisions. You see, I believe the compound interest, as Einstein said, the compound interest is the 8th wonder of the world. Those who understand it earn it, and those who don't pay it. See, today we're holistically being attacked, and the encumbrance of these attacks with debt are encumbering our freedom, and it is increasing at an unprecedented rate. This unconventional warfare leads to the destruction of wealth, the destruction of family, and increased social unrest. So today's most effective weapon is debt. And you need to get on the right side of debt. See, we're seeing a great deal in the world today, a lot of confusion, complexity, and with that brings disruptions and inefficiencies and misalignments. And in the midst of this, it brings substantial opportunities, ready to be seized by those who are informed and ready to take action. And so if you want to take advantage of these inefficiencies and misalignments, I'll share that with you in the end of how you can do that. Again, stick with me for the next couple of minutes. It's not going to take long to get through with the information we have today. And I'll show you how you can actually take advantage of that, because the most prepared and alert always wins every time. So today I want to talk about how there is the commercial real estate crisis unfolding right in front of us. And what do I mean by that? The data I'm going to show you today is, as you see in the news, that the Fed And the mainstream media are all saying how, we're not seeing any recession, we're not seeing any increase in unemployment, and the banks are doing okay, and things are going to be just fine, just fine. But really, the feeling, the sentiment out there is we don't feel like we're on steady ground. And I'm going to show you some data that shows that we're actually not on steady ground and some stuff that's actually really happening out there. So let's take a look at a couple of these charts. Now, remember, before we get to this, how I've always said what I feel is going to be happening. My insights and my data is telling me that the debt crisis is going to be triggered by commercial real estate, which is going to continue through the commercial and regional banks. And this is where I'm going to show you some data to actually back my statement that I've made a number of times. So let's look at the first piece of data here coming from MSCI Real Assets, that the sale prices of commercial real estate has plunged, particularly in San Francisco, Manhattan, and Boston here in the US, significantly. If you look at the San Francisco, over 40% discount or reduction in price, we'll call it. A reduction in price, as this data says, on commercial real estate and office buildings in these key cities. And that's fourth quarter 2023 year over year change. You're going to see that number increase. That is just the beginning, but you're starting to see some signs of the discounts, especially in these particular areas. It's not to go without pointing out the cities that are seeing the most reduction in office space price reduction associated with leadership by political party. It's not a coincidence that these areas have become more, if not they haven't already, more business unfriendly. And so as businesses move away from these particular areas, you see a lot more vacancies and therefore price reduction, price reduction, price reduction, because demand is not there, because a lot of businesses are being run out of these particular cities. Okay, so we want to look at this by the lens of years of supply. How many years of supply are on the market? And this is how long it takes or how many years it would take to absorb the current inventory on the market. And you can see that the gold or yellow line here, it represents a Class B and Class C commercial real estate. And you're looking at 23 years of supply at this moment. The norm has been, the average has been 19 years of supply. But now that's increased to 23 years of supply, and we're just in the first innings of this downturn. If you look at the blue, it's never been as high as this in the last 23 years, or even longer, where we have 18 years now supply of Class A of commercial real estate office space. Okay, so this has never been this high ever before. And now you're starting to see the data supporting where this downturn is going to really stem from. And this comes from CoStar, Morgan Stanley Research, and CBRE Economic Advisors. And now let's break that down just to a little more about the years of supply by sector. And there's a comparison here of what the pre-pandemic averages look like and the current years of supply now look like. Past the pandemic, where businesses have opened back up, but now due to hybrid and remote working, this is where we're seeing the supply of office space of all types of commercial real estate. And obviously, it's no surprise that the biggest supply out there by way of inventory and absorption rate is Class A and Class B office space. Okay, and you can see the other areas as well: apartments, industrial, senior housing, storage, retail, and retail strips. Okay, so retail isn't doing as poorly as it did prior to the pandemic. Storage is about the same, senior housing is about the same, and industrials. But apartments, I believe multifamily is included in there as well, is starting to see larger supply as well, which is where you're going to see the next crack on the commercial real estate side. Is going to be the multifamily housing sector as well. You're starting to see that creep up a little bit. So we'll get more data as time goes on. That's going to pop a little more, in my opinion. Okay. And so this is what the real data is out there. But what are we being told? It was just last week that Janet Yellen said to her investor constituency there that, yes, CRE losses are concerning, but she tried to comfort the investors with the understanding that the situation is manageable. Last week, I told you how there was articles and people already talking about how Jerome Powell was summoning his inner Ben Bernanke. Everybody remembers how Ben Bernanke talked about the contagion of subprime back in 2008 would not spill over into the bigger markets. We don't expect significant spillovers from the subprime market to the rest of the economy or the financial system. Famous quote by Ben Bernanke back then, and we all know what happened after that, how the subprime crisis completely overwhelmed the financial system and what we went through. And now I'm making correlations here that, history doesn't necessarily repeat itself, but it does appear as a cousin of what events happened in the past. And here it is, you have Janet Yellen saying similar things. This is manageable. We don't see it being an issue. This is what we heard in the past. Okay, these are the things, and there's a playbook how to do it. As soon as they start saying that things are going to be just fine or manageable or it's contained, and when they try to assuage investors, that's the time you need to be alert. These are the times you need to be alert. Okay, so with that, that's all I have for you today. And so while we're living in this environment of chaos, crisis, conflict, complexity, and confusion, as we just saw, okay, there's a lot of opportunity out there, and you have to be informed, not only to be about what decisions you're making to see if the opportunities are in front of you are real, but if they're actually right for you. And we want you to gain that clarity and confidence to protect your assets and your wealth in a sound manner. Okay, so that's why I come here every Tuesday and I bring this information to you so that you can have better understanding and making better informed decisions. And we'll give you the step-by-step of what you need to do to thrive in this environment. Okay, so we are going to be putting on a live presentation. That's going to be about 30 minutes or so. It's free. It'll take less than an hour. We'll probably be about 30 minutes, and we're making preparations to do this now. You should get on to our guest list at more.gritrust.com, and you can find all these other videos that we've done here at gritrust.com. So I want you to go there. We want to hear from you. Okay, remember, there's 3 things you need to do to protect your assets and even thrive through chaos, conflict, and crisis. And that's number 1, to be educated. Number 2, to take quick and decisive action. And number 3 is to limit your expenses and your conflicts. So I've brought you some education. Part 2 is up to you. Take some quick, decisive action. And with that said, if you have any questions here, contact me. I welcome the opportunity for one-on-one conversation, not to sell, but to be of service to you. And I wish you all a prosperous day, and I will see you all next time. So until then, have a great day, everyone.